This video goes over exercise 15, which many students have trouble with. Total assets and total liabilities are given in the problem. We know that assets equals liabilities plus owner's equity. That's the accounting equation. And if assets and liabilities are given, what is missing? What's missing is owner's equity. So let's calculate that. First, lay out the accounting equation. Assets equal liabilities plus owner's equity. Beginning of the year and end of the year. The balances are given for assets and liabilities. Beginning of the year assets given is $109,700. Same with liabilities. It's given $43,900. To calculate owner's equity, use algebraic equation. Take the total assets minus total liabilities. $65,800 is owner's equity for beginning of the year. Do the same for end of the year. Total assets minus total liabilities. $101,800. Now we have owner's equity for beginning of the year as well as end of the year balance. The problem gives us 4 scenarios for each of which we must determine the amount of increase or decrease in owner's equity during the year. For example, with Virgo, it says the owner had made an additional investment of $28,200 and had withdrawn $6,800. Based on the scenario that's given for Virgo, the fact that they had additional investment and also had a withdrawn balance, how do we know owner's equity for Virgo increased or decreased during the year? To find out, we must understand and apply the statement of owner's equity. The statement of owner's equity calculates the owner's equity balance. There are several components. It begins with the beginning balance, and the beginning balance comes from the prior period's balance carried over to be the beginning balance for this period. Beginning balance would be 0 if this is the first period that the business started. Beginning balance is increased anytime there is funding or additional funding injected into the business. We call this capital. During the period, the company operates, and if it does well, all of its revenue would be higher than all of its expenses. Then we have a net income, which increases owner's equity. Again, think of owner's equity as ownership, right? If the business operates and functions well, the net income at the end of the current period would help to increase equity or ownership. Otherwise, a net loss decreases owner's equity. Now, the third and final component of owner's equity is withdrawal, which is opposite of capital. Capital is putting money into the business, injecting funds into the company. Withdrawal is if the business decides to take money out, the owner decides to take money out of the business for personal use, then this drawing decreases owner's equity. We see that these 3 components, capital, net income or net loss, and withdrawal, is combined to result in a change in owner's equity, which could be a decrease or an increase. Okay, and this increase or decrease, it resulted from the current period activity. Again, we have a beginning balance, and then we have a change in owner's equity from the 3 components of owner's equity. And then we have an ending balance of owner's equity. Beginning, add to it the change in owner's equity made up of capital, net income or loss, and withdraw. And we have ending balance of owner's equity. Back to the exercise. So we had already calculated owner's equity balance for the beginning of the year and for the end of the year. Use this information to populate. Beginning balance is here. It was already calculated before. So was the ending balance. What about the additional owner's equity capital? That's given in the problem. It says the owner had made an additional investment of $28,200. $28,200. The problem also states that for Virgo, the owner had withdrawn $6,800. So now we have populated every element of statements of owner's equity except for net income or net loss. We can calculate this using algebraic equation. Net income is ending balance minus beginning balance minus additional owner's equity capital plus withdraw. The answer is $14,600. Let's check that everything is right. The owner's equity end of year balance $101,800, also shown here. Let's check this number. The ending balance is made up of the beginning balance of owner's equity plus additional funding owner's equity capital plus net income $14,600 minus withdraw $6,800 comes out to $101,800. That's correct. An easier way might be to lay out the statement of owner's equity formula horizontally as seen here. And then you solve for the unknown net income. Let's go back above and go over the solution for Virgo. The drop-down box, select increase. The balance is $14,600. That's the net income. It comes from here. We did the calculation. And also here where we see horizontally the algebraic equation when we solve for net income.